Hey guys, welcome to this video. Just filming this one, 6:30 a.m. In the UK, GMT time. I know it's a bit early, but I've got a few errands to run today. Bank of England at midday. We're probably going to be more focused on the comments. I should think they will just follow the same sort of trajectory as you've had with the Federal Reserve, with a slight difference because you've got flat or really slow to none growth in the UK. Lots of forecasts for the UK as well. Goldman Sachs, etc., have said that they don't think that the UK is going to grow as much as they thought. So we've got lots to cover just now. Don't forget to get my free training underneath. If you are genuinely serious about learning to trade, you need the right tools. Okay. Once you're in there, you'll see those. So let's go for it then. Pound US dollar. Yesterday, of course, we had the Federal Reserve speaking about the US economy. And what that did was it caused people to get rid of their dollars. They're not interested really in saving them anymore because obviously there's a reduced interest rate. That caused a spike in the value of the pound, the euro, everything like that went up. So from a macroeconomic basis, and just really discussing the the core fundamentals behind the very recent rise, it mostly just comes because of interchanging interest rates. You'll always find that currency markets are ruled simply, believe it or not, by the stringent or the loose effects that the central banking governing body gives to that economic jurisdiction or zone. It is what controls financial markets, the flow of money. Okay, so higher interest rates, people save their money. Lower interest rates, people obviously take their money out. Economies often improve at the same time and they invest in the stock market. Now, with your pound, I should think that you may see the Bank of England, sort of echo somewhat what the Fed said. I don't think they're really going to change their rates too much, or at least their outlook. Okay, they're very protective, the Bank of England, more so than other central banking bodies. They're very tentative, they're very cautious people. For whatever reason, it might just be because the UK economy looks a little bit rocky. It has for a long time, hence the lack of growth. So the fundamental outlook, you may find that today they say that they might cut the rate slightly earlier. That has come across the wires. But I don't think there's going to be an enormous sort of change. Nonetheless, we can look then from a technical perspective of where we would like to enter. So if you're looking at the weekly, you've had your rise from down here. We all know that. Okay, you saw that with your stock oscillator below. Your stock oscillator or RSI really gives you a gauge for the value of price at any time. Is it high? Is it low? And what you're seeing now is a push up on your stock oscillator or RSI, whatever indicator you want to use, and you're coming back to where you previously fell. Now, on your weekly, like I said, you're coming quite harshly back into where you fell, okay? And I wouldn't be shocked at all if ultimately you get higher than this. Again, as many of you know who watch me, I am not buying here. If I wanted to buy, I would do it there, and I did mention to do that because of this minor support. Okay. In fact, I tell you what, I'll draw it with an actual arrow. That might help. This reasonable support. We discussed how if it got lower to this level, we may rebuy /DCA, but you didn't get there because the sentiment is with the counterparties of the US dollar. So I wouldn't be shocked if we get higher, and I wouldn't be shocked if you get nearer this 200 MA on your weekly. That would come in line with where you previously fell. And for me, that's going to be a reshort area. If I want to sell it now, or I would only lightly short it, probably for impulse gains. Okay, but I wouldn't be shocked, like I said, if you do end up going up here. I'm not going to buy it at this point. I would need a fall or something like that. Okay, but otherwise, I think ultimately you may get higher back to where you've been previously and perhaps beyond. So to the upside, I think you may get up there. Like I said, I wouldn't buy it now because you do have minor resistance. It's always important to note that when you're attacking minor resistance, it doesn't mean price can just go straight through. Price can still rebound and fall. So I would consider very lightly shorting it and holding off further for 130, 1.3. If you were going to take it long, I would really prefer it in areas where you've got key price rejection previously, key price action. Okay, again, that's going to come around your key technical zones, a mixture of key MAs, and obviously price rejection, which you can see. Anything lower, really, again, as I've mentioned before, I would consider buying, okay, especially on a harsh fall if you get it today. I'm not totally convinced that will occur. I wouldn't be shocked if you do keep going higher. But like I said, I'm not going to buy unless I fall. I need value. As a trader who makes money, you really are going to require value. And what I mean by that is you need a fall to get long. Because if you're buying after a move, you rarely ever are going to have market value. Okay, because you're just waiting for a fall to happen, more or less. The longer something goes up, often you find the more likely it is to fall back to key MAs. And that's why I always short high prices, because that is naturally how you make money trading. Okay, it's selling highs and buying lows. If you can get it tattooed, perhaps get that done. No, I'm joking, but just remember, okay, remember that. So at the moment, market's not too interesting. Okay, could likely short, but I would probably rather hold off until key areas higher in line with our previous high, because that's where we previously fell quite viciously, and I don't think you'll get through it just all in one. If I want to relong it, you've got risk averse zones under the previous low, okay, but you did have somewhat of a reaction here, so one can assume perhaps you may find further bounces at that price around 125 area. So lots to go and lots to see. Bank of England report later, so just be around for that. It could be prolific. Like I said, get my free training underneath. If you're serious about trading for income, you can go further than that within. Thanks for watching, guys. See you in the next one.